Hello, colleagues. This is Oscar, the lead analyst at Binarium. In this video, we will go over how to use the momentum indicator in trading strategies. But first, I'd like to ask you a question. What do you think is the best way to use this indicator? Leave your answers in the comments and watch the video to find out if you're right. We'll be working with the TradingView chart, and to do that, we'll enable it in the Binarium terminal. In the Indicators menu, we'll look for the simple momentum indicator, and you can use the search by name to find it. Then we'll add it to the chart. The momentum indicator is one of the simplest technical indicators, which measures the speed of price change for an asset over a given period. Momentum analyzes how fast and in which direction the price is moving and instantly signals a potential trend reversal. In most cases, this indicator is a leading one, meaning it predicts the possible direction of the asset's price before the change happens. The momentum indicator is displayed as a curve that fluctuates around the zero line. Its position indicates the direction of the trend. If the momentum crosses the zero line from bottom to top and stays above it, this means the price is rising faster than it was a certain number of periods ago, indicating a strong uptrend. In this example, we can see that the price chart has stopped near a strong support level, and the indicator is ready to settle in the positive zone, meaning above zero. This marks the beginning of an uptrend. If the momentum curve crosses the zero line from top to bottom and enters the negative zone, meaning below zero, this could signal the start of a downtrend. The momentum indicator can also move near the zero line without entering the positive or negative zones. This shows that the price hasn't changed compared to a certain number of periods ago. Such a situation indicates weak trading activity and that the price chart is moving sideways or in a flat. It is not recommended to open trades during this time. However, experienced traders know that after a flat, a new movement often begins, so it's important to be ready to act. Now let's go over how to use momentum in trading. First of all, as I mentioned earlier, momentum is used to identify the trend and its strength. For example, if the indicator is above zero and continues to rise, this may indicate a strong bullish trend. On the other hand, a drop below zero could signal a strong bearish trend. Let's take a look at an example. On the chart, we see that each subsequent price low is higher than the previous one. At the same time, the momentum indicator confirms the growth, which is why I opened a trade for an upward movement. Let's break this down in more detail. Here we can see that momentum crossed the zero line from bottom to top and is holding in the positive zone, meaning above zero. This gives us a signal that the price chart is likely to continue moving upward. Notice that the subsequent rise in the chart forms an uptrend channel. As we can see, the momentum indicator signal was accurate, and the trade closed in profit. The second trading situation where the momentum indicator can be used is to identify overbought and oversold conditions of an asset. When the indicator's value sharply and significantly rises above its usual levels, it may signal that the asset is overbought and a downward reversal or correction may soon occur. If the indicator's values drop significantly below standard levels, this may signal that the asset is oversold and an upward reversal may be possible. In this example, we can see that the indicator has dropped deep into the negative zone, meaning it has fallen well below the zero line. As we already know, this is a signal of overselling. So I decided to open a trade for an upward movement. Notice that this low on the indicator is significantly lower than the lows of previous periods. This means the asset is locally oversold, meaning its price has been undervalued compared to its actual worth. As a result, bulls stepped in, actively buying the asset at a low price and turning the chart upwards. The third way to use the momentum indicator in a trading strategy is to look for divergence signals. Let me remind you, divergence is the discrepancy between the price chart and the indicator's values, where the price of an asset is rising, but the indicator is going down. I talked in more detail about divergence in the videos on MACD and CCI indicators, so make sure to watch those if you haven't yet. So if the price reaches new highs while momentum shows lower highs, this could indicate that the trend is weakening and a downward reversal may be on the horizon. Let's look at a divergence signal example. Here we see that the price chart is drawing higher and higher highs. Drawing a line through them, we clearly see the upward price movement. However, the momentum indicator disagrees with the price chart since its highs are getting lower and lower, and if we draw a line through them, it becomes clear that the indicator curve is pointing downward. This is a divergence signal, meaning a possible price reversal downward. So I opened a trade for a downward movement. Now I'd like to get your feedback. Let me know if it's now clear how to use the momentum indicator in trading. I'm looking forward to your feedback and questions in the comments. Meanwhile, we can see that the price has predictably reversed and is dropping rapidly. My trade has closed in profit. It's important to remember that momentum is sensitive to sharp price movements, which can trigger false signals. Therefore, it should be used in combination with other technical indicators or analysis tools to increase the accuracy of your predictions. Also note that the momentum indicator is most effective in strong trends, while in sideways movements or flat markets, its signals may be less reliable. So it's better to avoid trading during flat periods and wait for a new directional movement to begin. For confirmation of momentum signals, you can use the MACD indicator, for example. In this example, we see that the momentum indicator is trying to hold above the zero line, signaling a potential uptrend. The MACD indicator confirms this signal as it's in a state of convergence, which is why I opened a trade for an upward movement. As I mentioned before, I've already talked about the MACD indicator, as well as convergence and divergence, in a separate video. You can find the link in the description. As we can see, the trade based on the momentum and MACD signals closed in profit. If you have any questions about the topic of this video, feel free to leave them in the comments. That's all for now. See you in the next videos.